Hi, this is PR Sundar. Welcome to pre-market report sponsored by taxbuddy.com and finbingo.com. First, let us look at the global cues. The US Fed meeting outcome. What people expected, they did not expect any rate hike in this meeting. They expected a rate hike from next meeting, that is in March, and everything went well as people expected. But there was one statement that Fed chairman has spoken additionally, that is, inflation is likely to be higher in the coming months. So that is considered as a bad statement, it is considered as a hawkish statement. But despite that, yesterday the US markets did not fall much. In fact, Dow was about 450, 500 point higher, then came and closed 120 point lower. Nasdaq was nearly 400 point higher, came down and closed almost flat. And on a close to close basis, the US markets were not really very bad. But what happened today morning, the futures are trading significantly lower. Right now, Dow future trading more than 400 point lower, and Nasdaq future trading around 250 point lower. And Asian markets are all selling off. And look at the Japanese index is down by more than 3%, Hong Kong index more than 2.5%. So first, what is the reason? And I was just explaining to my friend, if a child is playing alone in a house, if it falls down and then it got hurt, and then it doesn't cry immediately. It gets up, comes, look for his mother. As soon as the child sees the mother, start crying. So sometimes the reaction in stock market comes little bit late. So yesterday, the Fed meeting outcome, the reaction is coming actually little late. It did not come during the market hours. And I always say, on an even day, the market is all about long and short. People who are having some long position, even when the news is bad, when the market falls, they will like to square off their position, book the profit. And even if the event is good, the people who have taken long position ahead of the event, they will be booking profit at higher level, bringing down the market. So on the day of the event, market can move anyway, irrespective of the outcome of the event. But what happens in the next few days is more important. So in that sense, so what is going to happen today and tomorrow is going to determine the long-term trend for the global markets. So US markets went for a roller coaster ride yesterday also, but it was not as bad as the previous 2 days. The previous 2 days, the Dow moved more than 1000 point up and down, and yesterday it was about 400, 500 point. But Nasdaq from plus 400, it has come to neutral, but now it is again down by 250 point. So one thing is very clear, this US inflation related problem is going to continue. And in fact, if you forget about the Omicron variant, coronavirus, corona pandemic, if you leave out that, so in the last 5 years, the only problem markets corrected significantly is because of the US inflation. You may remember in 2018, the February first week also, the Dow fell more than 1000 point, and then it fell another 1000 point in after market hours. So taking the total fall 2000 point in just one day. So this US inflation fear has been there for many, many years. So right now, the question is, what has happened yesterday, even day, forget it. So what is going to happen today and tomorrow? If today also US markets close significantly, then that is really very bad. So this is all about global cues. Now the people have forgotten about Omicron. People have forgotten about Ukraine war news. And even the Ukraine people say the war is not imminent. Ukrainian leaders are saying that the war is not imminent. But however, the fear is still there. So coming back to our local markets, then the things are looking really very bad. And on Tuesday, the Nifty shot up 450 points from intraday low. The Bank Nifty shot up nearly 1300 points from intraday low. But today, SGX Nifty indicating more than 400 point gap down. And that is really very bad. And in fact, it was expected. But only thing is, like the gap down, like I thought maybe 100, 200 point based on the global outcome. But why the fear is so extreme in SGX Nifty is because FII is selling 7,100 crore on Tuesday. Now, if you look at the last many years, even during the 2020 coronavirus period, they did not sell more than 7,000 crore on a single day. Of course, they've sold 5,000, 4,000, 6,000 crores, taking a total selling to 65,000 crore on that month. But on a single day, they did not sell more than 7,000 crore. So, in fact, if I remember during the last 5 years, there was only one day, the last February 26th. So, that was the only day FIIs have sold nearly 8,300 crore. And the markets corrected so significantly ahead of the budget last year. And that particular day, Nifty fell 600 point intraday and 500 point on a closing basis. So, on one side, if you want to look at positively, FIIs have been selling 3,500 crore every day. And because Wednesday is a holiday, so on Tuesday itself, they've sold even for Wednesday. So their quota of 3,500 crore on Tuesday and 3,500 crore on Wednesday add up to 7,000 crore, and they have sold it because Wednesday is a holiday. But then, like people don't see this that way. So Asian markets are viewing this Fed meeting outcome as a very bad one, and US markets also. And top of which, this 7,100 crore is adding to the, what we can say, adding fuel to the fire. But however, domestic institutions have also bought for 4,500 crore, aggressively supporting the market. So this again brings back to my hypothesis. Even yesterday, I have given in a video open letter to Honorable Finance Minister Nirmala Sitharaman, that there seems to be something going on between FIIs and the government of India. And it seems that FIIs are all out to punish India. And one of my friends told me probably FIIs want to make sure that LIC public issue does not succeed. So that's why they are bringing such a bearishness. So today market is going to be all the more volatile, and the gamma effect will be kicking in. So what is gamma effect? Why the markets are hugely volatile? Maybe I may come out with a video in this weekend. And right now everything is looking bearish, and the problem is not falling. And when the market is falling, we keep selling call options. But the thing is, intraday there was a recovery of 1,300 point in Bank Nifty, and intraday Nifty recovery 450 points. That breaks the conviction. So usually the markets will punish the weaker bulls as well as weaker bears. So on falling, weaker bears will be trapped. So technically, so I'm following a technical analysis. As per the technical, actually I'm following the technical analysis, but I'm not taking position accordingly. That was my problem. So as per my technical analysis, the Nifty has become short at 17,900. But those people who have shorted there, they don't have to worry about this intraday spike of 300, 400 point and they still make profit. So slowly I'm also getting more faith into the technical analysis, because in the initial days I was not a big fan of technical analysis. So now I find that during the high volatile market, so these technicals work really very well. So the panic is there, and we are at the peak of the panic, but we don't know how much domestic institutions are planning to support the market. And last two times markets took support and shot up once Nifty broke 17,000. Nifty broke 17,000 on Monday also, but by 2-3 points. And Nifty broke significantly 17,000 below on Wednesday, but both the days Nifty ended above 17,000. So today also it looks like as if the Nifty will gap down at below 17,000. So it will be interesting to see whether the domestic institution come and place a buy order and bring the market to more than 17,000. And a lot of reversal trades may happen today, because today is a monthly expiry. So that's one thing. Second thing, usually in a bad month, usually the Nifty will close at the lowest point of the series. So that is where my worry comes. 16,850 is the lowest point in the series. So probably, who knows, it may close even below that, the way things are going. So anyway, there is no point in talking about the support. I think the resistance should be around 17,200 today. So hope you enjoyed watching the video. Thank you for watching. Stop.